Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. A lot to cover today. We have some key movers and shakers. We have some data coming out this week. Let's start out with that. So this week is there's going to be two major events. Number one, NVIDIA earnings after the bell on Wednesday around 4:20 p.m. Eastern Time. And then Friday, we'll get the PCE data, which is the favored gauge of inflation by the Federal Reserve. All right, so what we're going to do now is we're going to flip into the action in the chart. So follow me over to the big board here, and we'll take a look. And what we can see is pre-market, the S&P 500 is basically trading higher. Now, what's interesting about this is we saw a big sell-off on Friday. One of the things I always say is when a big sell-off occurs on an options expiration Friday, always remain suspect until it's confirmed the next week. What do I mean by that? Well, on Fridays, when there's a big options expiration where a lot of options are expiring, the institutions tend to play games. They might release a little extra news that freaks the market out because there's too many people that have bought calls, and those calls might be in the money, and they want to push them out of the money. Now, why do they want to do that? Well, because in general, 99% of all calls and puts options, they are sold by institutional money to retail investors. Now, the institution gets a premium as a payment for that option. Now, the negative is for the institution, if those options expire in the money, then the institution has to pay out the retail investor. So there's an incentive for the institutions to drive the market in a direction where they make money by getting as many puts or calls to expire worthless. So when you're going into an options expiration with markets at all-time highs, do you think more retailers are buying puts on the market, or do you think they're buying calls? And the answer is calls, right? Investors are generally bullish. They're looking for further upside. There's been momentum in the markets, and so you have a lot of calls being bought. So on options expiration, when there's a big sell-off, it partially, and I'm not saying all the time, but partially it could be that there's been some leaks of negative stuff to try to create a little sell-side action to drive the market in the opposite direction, so those calls can expire worthless or as close to worthless as possible. Therefore, the institutions maximize their profit. All right. Now, looking again at the S&P, I'm not saying that necessarily is what's going on, but we certainly have a calming effect today. Here's where we closed on Friday, right down here. Here's where we opened in the pre-market 4 in the morning, and we're basically trading in a very, very tight range on the day. So we'll have to see where things go. If the markets were to reverse and sell off sharply by the end of the day, then you'd say, okay, this is actually some legitimate stuff because it's after options expiration. But if we just float back up for the next couple days, then you have to say, okay, chances are that was a kind of a contrived sell-off on Friday, and we shouldn't pay too much attention to it. All right, so let's jump back here. I want to quickly show you guys the daily chart on the S&P, and there is some technical stuff we have to monitor, but it plays directly into what I just talked about. So let's walk back to the big board here and take a look. So the first thing we have to note, and many of you probably saw this on Friday, is we closed back below this key trend line, right? So this key trend line we have been watching over and over again, which we confirmed above last week, we have now closed below. Now again, a close below does not mean that you have now broken back and have started a downtrend. We need to see confirmation back below. So what I always say is that if you close above the line, to negate that, all you have to do is close back below. So if you close above the line, all you have to do is close back below. But if you confirm above the line, what happens above must happen below, which means you have to close back below and confirm back below. And again, this technique is very helpful in deciphering, okay, you can see a big sell-off on Friday, but if we just float back up and go like this, well then, okay, no big deal. We never confirmed back below, therefore it could have been that game on options expiration Friday. All right, so again, little things to watch there, but I will be keeping a very close eye on the S&P. If it confirms back below, I will say this, is that you now have the recipe for a major fall. The reason is when you break out and confirm, which is is what we did last week. If you then negate, essentially fail the breakout, the biggest moves come from failed breakouts. So if you have a trend line here and you close above and you confirm above, and then it goes back down and confirms, it oftentimes leads to a big drop because it's a failed breakout. And failed breakouts, especially at all-time highs, can be unbelievably powerful in the opposite direction. Okay, so a lot of educational tidbits today. Quickly flipping over to my chart here. This is a chart I'm also watching. You have a potential breakdown. Notice how I say potential. And I say potential because you closed below this big line here, but we have not confirmed. So right now, it looks like the NASDAQ will open up. We need to test and see where this is later today to see, does it come back down, does it confirm, or does it recapture this trend line and get right back into this tightening wedge pattern. All right, so again, watch. This is on watch. This is the NASDAQ composite chart. Now, some key action this morning, not a very liquid stock, but Domino's Pizza is trading down on earnings. The only level I have on Domino's today that I will be watching with the Apex Live Day Trading Room is this one, taking this low and connecting it through this low. If we were to dump out to about 407 or so, 406, I think that's where I would start to nibble. You can also see right here, right? So you have this low area going right through here, which is around 402 or so. So that to me would be a multi-factor support level that if price fell into it today would warrant potentially a day trade long or a bounce expected on the charts. All right, so again, keeping a close eye on that. Now, Palantir is getting hammered this morning. There's more concerns here, and this is the key, guys, is we're seeing more and more of these cuts from the Trump administration and Doge that are now impacting more and more of these mega-sized companies. And again, there is more concern about Palantir and defense budget cuts that could influence that stock. Now, that stock was trading in the stratosphere. I mean, it was ridiculously overdone. Now it's coming back in. Now, again, I might have been a huge bear on this if we look back at the chart when it was trading up here. Should have never been up here. But now, as it falls, what do I do as a trader? Do I only say, oh, well, I only want it on the short side and da-da-da? No, heck no. As soon as a level of support starts to emerge, now I can talk about being a bull on it if it achieves a level. And this is what a trader does, right? A trader is neither a perma bull or a perma bear. A trader is always looking at the chart to get the insights into what could be the next move. So notice how you have this trend line from this low connected here, and then this flat top, this is a gap fill. If Palantir in the next few days dumps out to between 83.75 and let's say 80.75, that would be a major technical support, probably even for a swing trade, not just a day trade, but that will be a major level to watch. And right now, Palantir closed again on Friday around 101 and change, trading at 96.70 or so. So it is down about $5 pre-market, still a ways away from this level. So that's why I don't think it'll get there today. But on a multi-day basis, let's watch this level, folks. There could be something in play. Now, today we are seeing Microsoft not doing a whole lot. You might say, well, why is Gareth talking about it then? And the reason I'm talking about Microsoft today is because they canceled a bunch of leases on data centers. And again, this is something that we have to pay very close attention to, especially coming into NVIDIA earnings. So you have stocks like SMCI that have run up massively. They're key in data centers. You have other companies out there that are very key in supplying data centers and even the energy needed for data centers, like these nuclear kind of offshoot utility companies. If Microsoft is all of a sudden saying, you know what, we're not going to need this many data centers, let's cancel the leases on these, that could be a heads up that the AI trade and the data center trade is now starting to slow. Now, it'd be really interesting to see what NVIDIA says on earnings after the bell, but that is something that's piquing my interest as an investor and a trader. So if we go back to the chart here, you can see Microsoft's actually up fractionally, maybe because of cost saving and money saving after that big sell-off. It's also mirroring the stock market. Now, in the bigger picture, is Microsoft a bullish or bearish chart? It certainly is not a good chart, right? Down move, inside bar, break of the bear flag, and it's kind of hovering here. My guess is you have some downside coming. There's going to be a big support here around 383, pivot high, pivot low, and then eventually there's going to be a big support right through here. As we can see, this flat bottom here matches with that level. So there's some downside likely coming in Microsoft, but at least for today, it is holding up. Now, let's flip back to some of these other big movers here. So if we look at Carvana, and let's go over to the big board for this right here. If we look at Carvana, right, Carvana has now had a major drop in price. And this is, again, another one where many times in the game plan or trading the close, I've said to you guys, when we've looked at this stock that just was continuing to rally up, I said, listen, I mean, yeah, it's a pretty cool used car dealership company, but it's still used cars, right? It's not like it's AI. It's not like they're curing cancer or anything. Should have never been up there. Well, their earnings came out. They weren't that good. Now you're seeing the decline. Now, most investors are like, oh, man, look, man, we got to look at this and be bearish on it, right? And granted, I would call myself a neutral player right now. I was bearish up here, now more neutral. But like I always say, big flushes yield opportunities. Big pops also yield opportunities. And so for me, when I see the parallel line down here, right, we have low to low and to low, I start saying, okay, well, I'm going to sit back. I'm going to be disciplined. You know, if Carvana keeps flushing into this level, which is just below the 200 even number, I then might be looking for a trade on the long side. All right, and again, it's not being, you know, listen, I have literally I couldn't care less about Carvana. I couldn't care less about Microsoft, like all these companies, whatever. No bias, no, you know, long-term holdings, nothing like that. Being a trader allows you to say, hey, this is a vehicle for me to make money on, and I will go long or short depending on what levels are tagged. Again, that contrasts greatly with someone who is a, you know, perma bull on, let's say, a cryptocurrency or any stocks out there. And that's okay too, as long as you have that long-term horizon, right? We're talking, you know, years out, like retirement. You think, you know, this company's going to do great for retirement? Sure, that's great. But again, the beauty of what we do here and what I try to teach based on data and analysis is that there's money to be made by being short Carvana here, but then you can also make it long here, and then who knows, maybe we go short again for the next breakdown of the parallel. And by doing that, let's say you make 20% here, then you make 10% on the bounce, and then you make another 20% down, right? And so while someone who's just a buy and hold perma bull might be actually down on their entry or neutral or it's just up slightly, we can start adding these percentages up in the portfolio. And that's why swing trading, to me personally, is the best. It's because you could have a market that, and this is another great example, right? Let's just draw this down here. Here's a market, and the market goes like this. Okay, so let's just say we've been in a sideways market for a while, and in all fairness, since December, that's kind of what it's been. But if you're a swing trader and you're able to pick the highs and the lows and the highs and the lows, you're making 5% here, 5% here, 5% here, 5% here. And this is obviously a perfect world where you're nailing it perfectly. There's no trader that does that all the time. But the idea is a long-term investor for a period of time could be flat on their trading portfolio. We could be up 5, 10, 15, 20, 25%. That's the beauty of swing trading. That's what honestly, that's why the Winning Trader series, I created it. Again, that educational, whole epic there that teaches everything that I know in it, and all of these type of things that we do in the Smart Money services is to essentially try to generate more alpha than if we were just buy and hold. Buy and hold, you don't need anyone for that, right? I mean, in all fairness, you pick your favorite stocks and you diversify and you're good to go. But I like being able to generate more income. All right, let's go to a couple other charts here as we go back to the screen. Another one that again, I said right up here at Robinhood here. So Robinhood on earnings popped up. I said, guys, this was because crypto was so awesome. Well, crypto's died out. And look at what the price has done now. Now, same thing, trading at $52.39. It's up a little bit today, but look at this trend line. So would I expect, in general, an opportunity? So as much as bearish as I was there, if it comes in here, there might be a bounce opportunity to net, let's say, 10% on this. to the upside before then maybe it breaks to the downside. And that's, again, that same sort of thing. Same thing on AppLovin. AppLovin rallied on earnings right to the high end of a parallel, high pivot to high pivot. It's now coming in. So what am I looking at? I'm saying, okay, well, where is this going to have a bounce if it keeps falling? The 380 gap fill is a very intriguing. That's a gap fill right there. It's also the midpoint of the parallel. That would be support number 1, followed by support number 2. All right. So again, guys, as we get through this, let's get into Bitcoin. We can go over that. Again, this is what it's all about, and I'll go to the big board for this next portion here on Bitcoin. But again, just to stress, the charts, if you read them correctly, you will never be correct 100% of the time. That's important. That's number 1. Number 2 is, if you read them correctly, am I a believer that you can be correct 80% of the time? I do. I truly believe that if you learn all the things, and I continue to learn every day. I don't know everything by any stretch. I know a lot, but I'm learning every day. But if you keep learning, you can slowly improve those probabilities and get it higher and higher. All right. Now, looking at Bitcoin, amazing how Bitcoin, even over the weekend, has stayed within this parallel range, this tighter area right here. And so again, there's 2 things to watch here. Number 1 is you're watching this here from your high level, which is around 98,500 right up here, okay? And then your lower level, I believe, is around 90, I think it's around 94.5. All right, so there's about a $4,000 range here on Bitcoin that it's hovering in. Now, for me, it basically is as simple as if we break and have a daily close below this 94.5, we test 92 to 91, this trend line right here, which is a super, super long area of support. Now, do I know if that's going to break if we test it? No, I don't know. The charts need to try to tell me that, and I have to be watching the charts if we start testing it to see if it breaks. Same thing here. If we break 98.5, then the odds start favoring a move to the $108,000 to $109,000 level. But I'll tell you, it has been a long time, if ever, that I have seen Bitcoin in this tight of a range for such a long period of time. And what it is when you see a range like this in any chart, could be a commodity, could be a currency, whatever it is, stocks, crypto, is it's telling you it's building. It's kind of like it's under pressure. It's in a pressure cooker, right? And it's kind of building that next move. So the question here then becomes is, well, if it breaks out, do we just go massive move to the upside? Or same thing, if it breaks down, does it just wipe out this level and really start to head lower? But I do think that, again, this is starting to build that compression. The spring is winding for that bigger move outside, whichever way it breaks. So I am going to be watching very, very carefully. Okay. Quickly, a couple other charts that we always go over. Gold, which continues to really stay relatively strong here. We talked about how on Friday in the game plan on this chart on gold, how initially this doji was in charge, which was overall bearish. But then I said on Friday, look how it's starting to form a little bull flag here, which now is starting to maybe take out and annihilate that doji pattern. So it's even creeping today. Let's see. We get a close above the doji high. I think it's just a hop, skip, and a jump to 3,000. Now, 3,000 will be a lot of resistance. But right now, again, very interesting price action, even though it doesn't look like much on the chart. Silver today. Let's take a look at silver. Silver, after pulling back on Friday, small bounce today. It is holding above short-term support here, so we'll keep an eye on that. I don't really have much to update you. It's not a great chart one way or the other, but again, I do think it continues to follow generally gold's price, just underperforming as it seems. Next up, let's take a look at oil here real quick. Oil, small bounce after a pretty nasty sell on Friday. No trade here, guys. Again, we had a trade short on this, and once we got down here, we took profits, and it's just been sideways chop since then. Would I go long either of these levels? I'd have to reevaluate. I'm not in love with them, so again, I'd have to just watch and see. More than anything, I would like to kind of bounce up a little and then re-short oil based on what I'm seeing in the U.S. economic data that looks like we are slowing. And then lastly, let's jump over to natural gas. This this one's fun, guys. So this one, beautiful continuation fall. Again, this is one that I do have a short on with members of Smart Money Commodities. And sure enough, we had this big push up. I started actually shorting here, then added, and then added. We're now in the money slightly on this position, and I still think it's coming back in even more. So again, good to see that pullback off this. Notice the trend line here, and then you have the gap fill. We actually never officially filled the gap, but we kissed it by a penny or so. And those two lines connecting or coming together create a good area for a pullback, which is what we're seeing in Nat Gas. Nat Gas down 5% today, which is a very nice drop on that. All right, guys. So again, lots of good education today. Going to be watching very closely to see the NVIDIA earnings, the PCE data later this week. And let's also watch whether or not we confirm on the S&P back below that line. Same thing on the NASDAQ. Does it confirm to the downside, or was it a fake out on options expiration Friday? All of these things I will update you later in Trading the Close. That's 3:55 today. I'll be back right here at verifiedinvesting.com. You guys have a great day. I'll talk to you later. Take care.